Guys, good morning. Here we are with our CoPilot Pro, just kind of showing our ATM strategy this morning. One that I've built here. It's a 6-contract strategy. You see the full force here working. This is one of our classic setups. Now, I didn't let the system take the trade this morning. I did that with our toolbar. Did a manual discretionary enter. We were looking at, you don't see this on our screen, but one of my supplementary charts, we were breaking the brackets, which is one of the first things that we look at on our charts in the morning. We have classic setups that we typically take. One is a short breakout, and that was a scenario 3. Basically, or no scenario. Anyway, it was one of our classic little setups this morning that we took, where past our first target, which was around here somewhere. Our second target's down here at 68.27. Move this down below that. Our bracket has rotated down to the bottom, or is at the bottom, right here. The bottom of our bracket is at 68.27 or so as well. So that is a good target. Meaning it might get a little bit of resistance in here. You can either pull a partial take profit down here. I'm not going to separate it, but just know that it's probably going to reverse here in a little bit. And because I know that, I'll go ahead and tighten that up.
Stub filled.
Looking at Ichimoku on my supplementary charts, we may pause out here for a little bit and then have some more continuation to the downside. The cloud is thick in this area as price is developing right here. The reason for the thick cloud now is because of this area here. There's a battle going on right here. It created some significant turbulence or volume there, and that's what happens when it'll make the forward cloud get thick in that area. So you have certain areas where whenever you have that Ichimoku cloud on your chart and price comes back to it, it's going to come into some resistance because there's a battle zone there. There's an inflection point there. And then you have places where it passes through. You may have heard that the price will go through the thin part of the Ichimoku cloud. Well, there's a reason for that, because that's the pass-through places that you'll notice on like a volume profile. The thin areas. So they had all that figured out with the Ichimoku cloud a long time ago. Now we came down and we touched almost to the penny. And there we are again at that area. where we were looking for our target. And notice that's where the high volume is at. If you'll notice the volume here, that's happening right there at that target. And notice the difference in the volume here. Boom, it's picking up. Had a heavy amount of volume here, pushing, driving it down. Got here, we found it coming to support. Let's see if it's going to break it. Buyer stepping in again. Yep, broke them. I could have chose to, and I can still do that, just to demonstrate. Oh, look at the buyers. Buyer said, oh yeah, I'm supposed to be at this area here.
Order submitted. Order canceled.
Chart here. Just dots are forming. So the timing is right. It may go ahead and break it on down. Show you right here. You can take and do a
Order submitted.
resting order with our system, with our CoPilot, using the trader. You can take discretionary
Order
trades here.
filled.
We'll let that take us in there. What I would do in this instance, now of course, I am just sim trading this morning, guys, so just a reminder to trade at your own discretions. What I would do in this particular point is I would probably keep about 1,000. Lock in no matter what, about 1,000 there. I know you're not supposed to look at your P&L, but God, I can't help myself. Sometimes that's what I do. That's working out good. At this point, I'll probably lock it. Just give it a little bit of room.
Stop filled.
Yeah, that would have made a little bit. And then you can come back right up under here.
Order submitted.
Do that again. If it gets aggressive.
Order filled.
And I'll risk that little bit that I just did on that little trade. Yeah, that's going to take
Stop
it.
filled.
And I'll leave it well enough. That's what I'm going to do in this situation. Just showing you how you can use your CoPilot Pro here. Use the trader dashboard. We've got a lot of things that we're doing here. We're reworking and fixing here and just making better. For our Black Friday, guys, we're going to have a Black Friday sale here coming up. And I'm not going to be here long this morning. I do have another appointment. I've got to head out of here no matter what at about 9 o'clock. So let's just stay on here a little bit and see if our system takes a automated entry. We have it set up right here. You don't see it. I have our B4 wave in the background. It's not visible. One of the things that you can do, we have it using its signals here. Have it with the chart indicators and the indicators right there. You don't necessarily have to have the indicator visible. Sometimes you don't want that for clarity. You like the signal, but you don't want it to cloud up your chart, or clutter up your chart rather. So you can actually use the indicators without having the visibility. And B4 Wave is in the background here. For those of you who haven't been following us and kind of wonder what is this CoPilot you're talking about, this is our trader dashboard here. This is our dashboard. This is our trader dashboard, our strategy dashboard. Right now we have it armed continuous. We can scroll through that and do once a day. We can have it do a one-off kind of situation where it only takes one trade, and you'll have to rearm it. That's here. We have a trending market. We have different market structures that you can use here. We have machine learning here. We have different things that you can do at when an opposite signal fires. I mean, you can do nothing. You can exit the position. You can, if it's available, move it to break even to guard your profits, or just reverse. I have it set to reverse. You have long and short signal options. Let's say that you're short bias today. You know, we're looking at a scenario breakout to this downside, which is looking for short positions. So, you know, you may want to, you know, in that instance, you may only want to take the short trades for the day, not want to take counter trend trades. This right here is a filter. And what it does, it allows you to, we have an order flow library here. It's very unique. Yes, some of them are industry standard. You'll recognize some of the names, you know, trap traders, delta tail, delta surge, delta sweep. You may recognize bulldozers and PB reversals and stuff. You may recognize those as industry standard order flow signals. But each one of them has our own little tested and quantitative structure to them. So we've gone through and looked at those and tested them and figured out and tweaked them to our exact specifications. So that is our order flow library there. Now we're allowing any of these signals to auto execute. We have it at least one. You can have all signals, so everything you have selected needs to be there for that to happen. That's like a super filter there. One or more, that's typically where we leave that at. And I'm gonna just put at least one. Now we have chart indicators right here. What that's doing, that's picking up a third-party indicator, which in this case is the B4 Waves indicator that I was referring to earlier. And it's hidden in the background. I have it not visible, but it's there. And it's picking up two things. It's picking up one right here as a filter. These are our filters. I haven't gone over that, but these are our filters. And it's basically the wave is like a kind of like a super trend or whatever, and just for you to understand it. And you know, if the price is above, then you can, with this selected right here, you can it'll take a trade above it, or if it's below it, it'll take a short trade. That's just a filter. The other aspect of it is the signal that it generates right here. So we have a signal that's generated by the B4 Wave. And so that will pick up that signal right there, which will be included in our matrix. Then, of course, we have our filters. Down here, you'll see our filters that we have in place. I'm filtering with volume, pivots, which is one of our proprietary filters, and we're using the indicator. We also have L1 delta, L2, and very special to B4 is the L2 force. It's something that Barb found whenever he was putting together the delta indicators and filtering all that. It's a beautiful little discovery that he found, a phenomenon that happens in the market, that when it does, it has a very, very high success rate. So we're pulling back now. Our expectation is to pull back to the Kijunsen, which is at 68.38. The reason I say that is because you don't see it here, but I have on one of our supplementary charts, we have other indicators here at B4. And I don't have them all on this particular chart. I'm looking at Ichimoku. And we have an Ichimoku Shoyu. And it's about timing in the market. And we understand the pullback strategy laid down by Hosada, and he expects certain pullbacks to certain areas at certain times in the market. If you don't know, Ichimoku is about timing. And it's time for that candle to come up and test the Kijun. It got rejected by the Tenkan-sen right there just now. It came up and touched to the penny the Tenkan-sen on a 3-minute chart. But it could very well touch the Kijun here, which is the expectation. So what level is that? We have a KISS dot at 68.25.50. If we get back below 25.50, then it's safe to say we can. It's not going to touch the Kijun at this time. It's bounced off at the Tenkan-sen, and we could consider re-entering the short trade on a continuation. Now, of course, the safe re-entry, the conservative re-entry, would be at 68.15.50, which is your right here, previous low. So if we re-entered short here, we'd go below here and place a short, and we could do that like this here.
Order submitted.
Just using the KISS dot methodology. Let's see if it's going to go ahead and touch that. You could use it two ways. You could also do this. You could do as an example. You know, we expect
Order
it to
submitted.
possibly touch the Kijun. So, you know, if it doesn't, this is a good point to get in, an early point for a short. Looking for it to come back down to here. Or if it does go ahead and touch that Tenkan-sen, let's put a line up where it's at.
Order filled.
Kijunsen, it's 38. And we expect it to come up to right somewhere. Just demonstrating how you can use Ichimoku. Not sure this is going to work out here. Let's see what it's going to do here. And guys, again, everything that we're doing this morning is for educational purposes only. This was done using pure price action analysis. I wasn't looking at the order flow or anything, which you should do. You should have more than one means of confirmation. This is a trend line here. If it's going to break, it usually breaks on the third touch of the trend line. So yeah, it's liable to break that. Where's your support areas here? Where there's a support here, there's a support there. These are virgin points of control. This was violated. Here's the next one right here. But there is volume in this area. We can see that from over here. There's volume there. Let's see if it's going to hold up or not. Don't like that the volume is at the top of that candle. Oh, good. It pushed over pretty good. Don't like it when that volume's at the top of a candle on a bullish move. So this was a risky little setup here. So what I would do is I probably wouldn't take full risk on this. I'd look at my money too, and just keep $500. If that were the case. We'll go ahead and just touch that Kijinsen. Again, I'm looking at a 3-minute chart. Ichimoku. I would go ahead and guard. Oops, not working right. Can't talk and trade at the same time. At least I can't. It literally just basically touched the Kijinsen. I mean, it was like a tick away from it. That's close enough. So I may have missed the opportunity to lock that in, but I was just illustrating. If I get another chance to lock it in, I will. It's just illustrating how you can use that. Yeah, I'm gonna take that loss.
Stop filled.
Now, Ichimoku wise again. If we get below
Order filled.
that Tenkan, we're back you're looking for some continuation to the downside. That would have been a little early entry there. Of course, there's support right here. Keep that in mind. It's probably going to get down here and fight it. But if it breaks it, that's where it's going to be bombs away at. And there's the fight. Again, just demonstrating how you can use your trader section with your discretionary trades. I'll go ahead and lock that in. Probably lock in a bigger chunk of it. Now that's giving you enough room for it to dance a little. That's a Cajun trading term. Let the candle dance. Looking right here, there's a lot of volume right there. See where both of those points of control on those candles? That's a good resistance. Notice it started building volume there. It got close to the area and volume comes in. It may break it now. Let's see. No, it's pushing still. Come on, push it on down. Notice the volume right there at that trend line. If we break here, it may take me out. If we do break here, we can dance on down to here. So you could guard here. You could place a resting order still.
Order submitted.
Like that right there.
Order filled.
Quick on the draw, because you'd want to pull that. Uh-oh, lost my spot. Yeah,
order submitted.
I'm selling a spot. Sorry, talking to myself here, trying to figure out some logic. I know that's not the best person to talk to when I'm looking to find logic, but anyway, didn't have nobody else to talk to. Like I said, it danced on down to here. It probably would have been better to go ahead and lock that in.
Order filled.
Good enough. I'll stay on a few more minutes here. It doesn't look like it's going to immediately drop. It could, but I'm looking at the show you dots, and the show you dots are curved to the upside. I'm thinking we're at support here. The show you dots are curved to the upside. There's a lot of support in this area, so we may drift back up a little before we come, if we're going to come back down. So I'd be keeping a close eye on what it does right here. If it breaks above there, then I'm thinking somewhere. I already got my line. It could drift on up to here. Here's that drift. Well, imagine that. Break it though. We knew that was going to be a important area. You may go ahead and push it. Nonetheless, a good area to eye. Right here, you could do something. I'm going to go ahead and show you another aspect while I'm waiting, and I'm not going to be much longer here because I got to go. You could use this buy
Order
green,
filled.
sell red. So I'm looking forward to either reverse here and come on back to here or go up to there, possibly. So I could take and utilize another part of a pro trader tool right here. It's buy green or sell red. Now, I would look at that number right there if I was trading this. And I'd say, okay, yeah, I'm not going to give it all that risk because that would take all of my $1,200. But I would risk probably half of that or keep something in the pot. There was a little spot I was going to mark that I didn't, which is right up in here. When I was looking over there a while ago, but I didn't put a mark across it. That's where it hit. That's where it's testing it. And again, guys, everything we're doing this morning is for educational purposes only. You'll have to trade at your own risks. Now, notice how that candle's just sitting there dancing, and that's, again, a Cajun trading term. But notice how it's staying here at this area, at this candle for a long time. One of the things that I've noticed is when that happens, is when it breaks, you're going to get some movement. So you got to be ready to either put a resting order under this, to where if it comes down on here, we come on back down to here or here, and you can capitalize on it and recoup your loss. Or if it breaks through here, ready to follow it. When that candle just sits there for a long time and just chops and chops and chops, you got a lot of people pushing on both directions. And whenever they give, it's like a tug of war. Somebody starts falling at the line and gets pulled over the line, and he's yanking that rope. There he is. Now we're at resistance now. So you may want to go ahead and tighten that up. I'm going to go ahead and tighten that up a little bit. You can't just always count on this ATM because it's structured. It doesn't know that you got a level right here. You need to be able to use some discretion. In fact, I'm going to go ahead and end the trade right there. Boom.
Stop filled.
There it is. All right, guys, that's going to be it for me today. Notice, boom, right there at a level. That's the power of having these levels on your chart. We're getting that from footprint. Those are virgin points of control. It's a proprietary way that we have of determining that.
Okay, Chuck. So how many loss we had today? 1 or 2?
I've had 2 loss. Correct me if I'm wrong, Walsh. I think we had 2 losses and probably about 3 or 4 wins. I'll have to go back and look at it. But this wasn't with using. We haven't even entered a sig. These were all discretionary.
Yeah, so we were just waiting for the setup.
Yeah, we haven't had a setup from the system. You know.
Yeah.
I seen it this morning, and I seen. Excuse me. I seen our B4 algo, and how we were set up for a short breakout, and how everything lined up, and the system wasn't hitting it here. And I noticed the bracket rotation. I said, okay, this is right for the pick, and I'm gonna go ahead and just enter a trade. And so I did short, and we got down to short target 1, and it kind of chopped a little bit around short target 1 and a little below short target 1. Yeah, I'm looking at the candle wicks now. And so it tried to come back up and touch the short target 1 from the bottom side, and we got back into the trade and took the second part of it, took some of the pullback, and I forget, we lost somewhere after that. And I don't know if it was 1 or 2. I could go back and look at it. But I think we lost two discretionary at worst case, and everything else was winners. Now we're at VWAP right now. And this is the high. And it's the underside of the bracket. Now, if we break above that, Walsh, we can go up to the bumper rail there on below the go long, and then possibly the go long. So, guys, yeah. So I'm thinking it could touch the underneath side of the cloud. Is where I'm thinking is our next resistance. If we break above the short breakout, I'm thinking our next resistance area is the underneath side of the cloud. So that would be a buy here, and look at that. I guarantee that's going to be up to our level there. I know it is. Let's see, it's somewhere up in the 55 area. Yep, there it is. 55. So according to Ichimoku, the problem with that is right now is that the Chicow is below price. So if you had to grade this trade, Walshy, I mean, looking at it that way, yeah, there's a possibility it's going to do it. But then there's possibility there's going to be trouble in that trade because the Chicow is still below the price curve. And until that Chicow breaks, the safer trade would be on the other side of the cloud long. Anything underneath this little short possibility here is risky. Especially with VWAP right there. It hit VWAP right at that short breakout, right at the bracket. There's 3 levels of confluence. They're saying that that's the resistance area. If it does break it, it may break it in 1 or 2 or 3 hits, and then that's just the Chicow riding under the candles right there. So yeah, not the most high probability setup. Well, guys, it's 18 after. I gotta go. I done got myself in a bind here. I gotta go.